Okay. Hi everyone, welcome to this live show. As usual, we share with you my views on market, but for once we are going to do things a bit different today because in about 15 minutes, UK Prime Minister Theresa May will be going to give a speech, and she is expected to outline the basis of her government's Brexit plan. So we are going to take a look at the world market. Within the event. And about the macroeconomic calendar, honestly, I don't believe we are going to have to care much about that today because all of the market is moving on sentiment and waiting for whatever we are going to have, a hard Brexit or not. As you can see, and it's quite relevant, the levels we are breaking in between late yesterday and early today across the market. Dollar is in big trouble. Um, as we wait for Miss May, let's take a look at the euro. Uh, of course, much of the upcoming direction will depend on how the UK government will face the Brexit, right? But take a look at the euro dollar. It's breaking through 710. It was the level I had been targeting ever since late last week. And if you've read my reports, you will have known. Um, the pair, it's at the 38.2% retracement of a post-US election decline, right? The high we had on November 8th after Trump's victory, and low we set early this year at 314. So there we are, breaking through the level. What I can see so far, and in my humble opinion, of course, is that the ongoing upward move, it's quite corrective, but seems the market has found an interim top for the greenback. That the latest uh, uncertainty triggered in the U.S. not only by the Fed and the minutes of the Fed that mentioned uncertainty like 100 times, but also by the first press conference Donald Trump offered after the elections, right, which was more focus on his battle, his personal battle with the media, that the upcoming plans he had for the government, those promises we heard about taxes cut and infrastructure investment. So the market is a bit disappointed, right? It was betting on that the US was going to go full growth, full inflation next year, and all of a sudden that sentiment fainted, right? So here we are dropping the dollar, and I guess the market is taking any excuse to do so, right? To keep on dumping the greenback. Anyway, uh, as I was saying, the movement seems very corrective. If you take a look at bigger time frames in the weekly, I mean, you will find that the 800, 840 region has been a major static support all through 2015 and 2016. So to be honest, I would like the pair to settle above that level to talk about bullish extension, right? It also matches the 50% retracement of this latest decline. So I do believe that this is the key for the euro dollar. If the pair somehow manages to recover above that level in the upcoming days or weeks and actually settle above it, there's a good chance that the upward movement will extend beyond 110 during the upcoming weeks. But if as long as we hold in between 700 and 800 and we are unable to take that level back, the risk will probably remain towards the downside. Moreover, because as you can see in the daily chart, we have quite bearish 100 simple moving average around the 800 region, right? But these are general ideas. So uh, keep in mind that we are waiting just for Miss May. When it comes from for the pound to the pound, sorry, honestly, the pair is quite bullish, bearish, sorry, right? And despite the ongoing recovery we are seeing ahead of my May speech, the fact is that the Brexit, whether hard or soft, it's going to be a pain for the UK, and sooner or later the market will keep on dropping the pound. So we may see some wild movements today. Either side of the world will depend, of course, on how May uh, faces the Brexit, right? The general thinking and what's keeping the pound under pressure is the fact that the she's prioritizing keeping the borders under control and trying to catch free trade deals with countries all over the world rather than remaining within the single market, right? The European single market. So uh, if the Scotland or the UK in general has no more agreements with the euro area and they have to leave the single market, they will lose a lot of benefits they have, right? And that will make their products more expensive and difficult to distribute within the region. So that's what the market is actually fearing. And well, they can get this with the rest of the world, but they have to work it out. So nothing is for sure right now. The only thing that's for sure right now is the European single market, and that's the whole deal we are still about it. Anyway, I don't know if you follow stocks, to be honest. I don't trade equities, but I take a look at equities to try to find out where the market is going, how to measure sentiment, moreover. Sorry. Um, this is the FTSE and the UK Mayor Index. And as you can see, it has been rallying. It's record heights, 15 days in a row, closing at record heights. It started reversing yesterday, right? And because most of the profits UK stocks made are abroad, right, outside countries. So a cheaper currency makes that when they made exchange, their profits are larger, and that's why stock rallied much. But what market is or speculative interest is not taking into account these days is that the materials, the cost of production is also getting expensive, and at some point the market will notice that, and the rally will finish and reverse, and we will probably see a sell-off there that will weigh on the rest of the market sentiment, right? The rally has been based on a weaker pound, so if today we see the pound recovering, maybe, just maybe, the index will keep on falling. And given the negative sentiment we already had in Asia and Europe, stocks may continue falling. Risk aversion keep on rallying, gold up, Japanese yen up, I mean dollar yen lower, right? And dollar under pressure across the board. It's again a general picture, right? We have to wait and see what's going to happen right now. I said 7 minutes. Anything. Anyway, sorry. Another thing I was thinking it's this an old Fibonacci retracement. I had to delete it today, but as you can see, the OC has trimmed all of the December and November losses. The ones mostly all the ones triggered by Trump's victory, right? It has broken above a mayor's resistance level. Goodbye, Fibonacci. And here we go, keep on running. The fact that we had some strong inflation figures from the University of Melbourne and that base metals are running are helping the Austin to advance. And well, intraday and in the short term, the movement could be a bit overextended, but guys, how the market is. It was overall, here we are a bullish trend, and it will probably continue. What I have to add to this is that despite the Chinese trade balance was not uh, as good as expected in December, the fact is that imports rose sharply in the second world's largest economy. That's telling us that the demand for base metal will keep on growing, will remain steady. China is one of the largest consumers of base metals. Australia is one of the largest producers. So as long as Chinese economy looks healthy, right, the Australian dollar, we have another reason to rally. Anyway, I do believe that the market is unwinding their dollar longs at the time and will probably resume dollar buying if Theresa May goes for the hard Brexit side. But hey, okay, 5 minutes to go. Anyway, another thing that looks interesting, it's the dollar Japanese yen. I have a couple of Fibonacci's here. So let me take out the largest, which is this is a yearly one. Let's go for the shortest. Okay, daily. There we are. Uh, this is the rally we got in between November. Okay, and the high we made in December, right? And here we are when the pair broke below the 23.6 retracement, and it's heading towards this level, which is 112. For me, it's critical. If somehow the pair manages to break below it, we can go back to the 110 level. You know, in the Japanese yen used to appreciate at the beginning of the year, during the first quarter of the year, as the fiscal year in Japan ends on March 30, right? And there was a whole repatriation thingy in the past. Companies were forced to take capital back into home, and that's why the dollar Japanese yen used it to fall in this time of year and accelerating its decline late February on through March. But that laws in Japan changed a few years ago, meaning the repatriation it's not as high as it was 10 years ago, something like that. But anyway, the market keeps investors keeps thinking of that and keeps setting the pair ahead of the fiscal year end. So while it's not just about taxes and legal stuff in Japan, it's about market sentiment this time. But beware of that. Beware of the possibility that the pair will keep on falling until the late March and then recover. We have the Fed in the way also, nothing to care about right now, but well, they promised us three rate hikes this year. So let's see when the first come and if it's going to come, and whether Donald Trump is able to deliver what he had promised. That right, that will be a whole game changer for that situation of a rallying sharply into the ends of March. Anyway, the market is clearly trading on risk aversion and will probably keep on doing so. Let's wait and see. It's just a couple more minutes. A final word before we wait for our friend Theresa May. Uh, Oil prices, right? I do believe the market is finally convinced or believe that the OPEC is willing to go on with their output cut deal, right? But the Energy Information Administration in the U.S. made a forecast, right? The forecast, the yearly forecast, early last week, and it was showing that the U.S. is expected to rise production all through this year. So that is pouring some cold water or balls in crude, right? And still, we are holding about 52. I do believe that we have found a new comfort zone in between 50, 55, right? I'm not expecting much action in here outside those levels during the upcoming weeks. I do believe that by the end of January, if we see a really strong cat in OPEC and in non-OPEC countries that showing the deal, maybe then we are going to see some reaction in oil prices. But until then, I do believe that it's time to take a step aside and wait because we are in the middle of consolidative stage. Okay, remember that whatever the first reaction to the headlines of May are, the market may turn all the way around afterwards. It's not just following the first spike, what we are going to think right now. We are going to see how the market takes the news. When we have a big announcement like this one, I guess that the best thing to do is to give the market at least 15, 30 minutes so we can digest the news and then see whether the movement is sustainable or not. Anyway, the euro is struggling at around that major resistance. So let's see what happens. Let me see if I can find the speech and keep an eye on it while we're commenting here what happens across the market, okay? Okay. Not sure. Okay, from what I can see, the speech did not start. The market has frozen ahead of the news. Let's see if she announces a claim Brexit. I'm following also Twitter to see if I can see some headlines there, because as you see, I'm sharing my screen and there's not much I can do about it. You're still seeing my charts, guys? Yeah, I know. Okay. Okay, I'm not seeing much of action going on the street right now. So, yes, they're not as frontal as they should. What other great killers we can discuss right now? Oh, another thing that's quite interesting is the Dow Jones. The index had been at 19, right? 19,999 last week. The market was eagerly waiting for a break of 20,000. It didn't happen. Given market sentiment today seems unlikely it could. Moreover, with all going on around with Trump and with Mexico, China, Russia, uh, seems Trump is more focused in international conflicts than internal growth. But anyway, who am I to say nothing about him, right? He's the leader of the world's largest economy, not just me. Okay. Speech. It's delayed. I was hoping that May would start talking mid this coverage so we can comment something about her. So I will give her a couple more minutes, okay? Sorry for a bit of delay. Okay, just out. Okay. You know, one thing about this kind of macroeconomic or fundamental evidence is the fact of the market right now it's expecting bad news, meaning they're waiting for May to say that she won't go for bits of euro area membership, as she said a couple of weeks before, that she will dismiss partial those within the euro area. So if the news, right, are better than that pessimistic outlook we have been reading lately, then the powerful pound's reaction is that it's going to recover, and I see a scope to test 23.30, right? But if the news are worse than that, right, it's really tough on leaving the euro area and saying that she will trigger the Brexit Article 50 of the Lisbon Treaty as soon as March as she planned, without caring about the High Court, then the pair would probably plummet back to the 120 region afterwards. Okay, I would have expected her to start earlier, on time at least. But well, I've seen a lot of people sitting in a room waiting for her live stream. You can see the live stream at FXStreet.com news headline home page if you wish. I will not put on volume to it. Still waiting for her to show up. Still waiting. It would be a pity if she don't start speaking soon. Oh, I didn't notice that the dollar Swiss is breaking below parity. And there, as you can see, and as I was commenting a few minutes ago, major critical resistance support levels. The dollar seems to have found an interim top, and the ongoing movement seems poised to extend. Another thing that's quite important to comment ahead of May is the fact that her words, of course, will affect deeply the pound, right? And the effects will be probably long lasting, okay, and will affect in a much minor way the rest of the market. And then the effects in euro, you'll see the yen, the CAD, or any other currency or commodity will be short lived. Okay, beware of that. Don't If you see a sharp reversal in pound, don't bet for a sharp reversal in euro dollar also. Okay, she will start to speak, and I will try to catch up some headlines to share with you guys from Twitter, because I won't put the sound on. Okay. Formal negotiations to be triggered by the end of March. In the euro area, it says the UK cannot cherry pick access, which we already knew. I'm not sure if. Okay. Here, there we go. Let me see. Yes. Okay. Introduction, not much new so far. Not much of a reaction either. Come on, come on, come on. I will probably see first a reaction in prices and a headline coming over her wording, but well, let's see if we can discuss a couple. Okay, pound jumped like 30, 40 pips higher. Okay, Theresa May said, I want UK to be a great global trading nation. Not much more. She says that they will take a balanced approach as we cut the deficit. So not much more than that so far. Balanced approach. It seems relevant. Okay, the pound is jumping. Take a look at the chart. We have some resistance in the 20 to 30, 40 region. Let's see if the price is able to break above it. In that case, we would probably see a spike towards the 2280, 90 region. That's a key resistance, is sharper one at 2330. So, okay, Brexit timeline according to Theresa May, not much that we didn't know already. Triggers Article 15 on March 12, 17, ends leaves the euro area March 2019. Clean Brexit, says the news, but I'm not sure if we should mention that already. Okay, since there's not much out there yet, because I wish I can hear, but I can't. Okay, a bit disappointed so far. A lot of talking and little definitions coming from Ms. May, talking on how she wants to make Britain big and that she will respect more voters' decision. And many have felt that the UK's place in the euro area came at the expense of our global ties, says Ms. May, but so far, so good. Okay, I will wait a couple more minutes to see if we can grab some headlines and a final idea of what he offered. What if she offers something? Okay. Much pledged, little definitions. Okay, from what I have until now, all her words are indicating that they will leave single market. She said right now that the Brexit vote referendum was the moment we chose to build a truly global Britain, right? So she is sort of confirming that the UK, yes, plans to leave the euro area, although she has been quite cautious. She added that it remains in Britain's national interest that the euro area should succeed. So somehow saying that watching on 1 year area to break apart after the UK leaves. Okay, yeah, we are leaving the euro area, but not leaving Europe. Yeah, it would be hard for the whole kingdom to move away. Anyway, she's playing nice, guys, you know. She's being much more conservative than, less aggressive, let's say, than what we have expected from the weekend news and all the comments we heard this Monday. But not much more than that. Okay, the market is not sure how to react, still flat. I guess we are going to have to wait until she finish. Okay, she keeps on playing nice and adding little to what we already know, but it's quite clear that they are going to leave the euro area, the single market. I mean, I don't want the euro area to unravel following Brexit. Well, okay. As I said, she's not as aggressive as we were hoping for during the last 24, 48 hours. Now it's helping the pound recover further. Uh, Although I do believe this recovery is temporal, at some point market will realize the risks of and the consequences of living in the euro area. The fact that the economy will suffer big. Government will put final deal to vote in parliament. Okay, the final deal, not the date of when to trigger the Brexit. Okay, she played nice. Okay, I will wrap up it here. I know there are probably going to be more headlines on the matter, but what we're getting is a nice Theresa May right now. Risk aversion is reversing, as you can see in dollar yen and the gold indexes, right? The pound is going upwards, the rest is going downwards, not much, limited reaction, but as if risk keeps on easing, the dollar will probably recover some ground against the euro, the Swiss and the minor dollar block. Okay, and of course the Japanese yen. As for the pound, the softer than expected tone from Prime Minister May is probably helping the pair to recover. 23.30 is the critical resistance. Remember that, guys. And right now, we have this 24, 40, 50 region also next, and 25 as the line in the sand. I do believe that any upcoming move and up to 125 during the upcoming weeks will probably meet strong selling interest and lead to a reversal, unless the dollar keeps correcting sharply lower. But anyway, remember that the market is trading the pound ahead, and whatever the intraday reactions are, selling on higher is the name of the game in here, as no matter what are the intraday news. Okay, we're trading a longer perspective of the final Brexit. Okay, guys. Okay, sorry, I have extended past my time, so I have to go. But anyway, thank you for bearing with me and waiting for Miss May. And see you back soon, okay? I believe that next Thursday we are going to cover Leave the ECB with Johan and Mauricio as usual. So see you then, okay? Bye-bye.